Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, we're well and truly into February now, Phil. Busy time for the sector, especially on the franchise side, as businesses start to prepare for the 25 plate, because that will be with us pretty soon now, just three weeks to go.
Yeah, exactly. I mean, we were only talking about what a distant memory Christmas and New Year seemed. Now January is soon becoming a distant memory. The sector's moving so quickly at the minute. But as you say there, very swiftly moving through the first quarter of 2025. But we'll get on that sort of, what's happened in January shortly. But we've got a couple of shout outs first to share with you. So halfway through today's show, we're going to share you a slight snippet from an interview that we did from our latest supplier special with Tracker, who are the UK's leading stolen vehicle recovery specialist. And we chatted with Mark Rose, who's the MD there, about how the business is working closely with dealers for providing additional revenue streams and value-added products, which will come as a welcome for many dealers at the minute, and how they're working closely with other areas. But I won't ruin the snippet there, but it is in your podcast feed from earlier on in this podcast feed for earlier on in your week. So do stay tuned for halfway through today's show to listen to that.
And also this week, we caught up with Steve Young, obviously a friend of the pods, regular contributor, probably best known to listeners as a consultant with ICDP. But the reason for our conversation with him was to talk about Ceytaş Automotive, which is it's actually Turkey's biggest dealer group, and they're launching in the UK with Steve Young as their MD. So they're opening a site in West London, it's called West London Auto, and we reported on this back in December. But we thought we'd catch up with Steve to see how that's progressing and how the countdown to March is going, because the plan is to open in March, ready for the 25 plate, with the sites representing a Motor and Jaku. And without giving too much away, it was actually fascinating just catching up with him, finding out the background on Ceytaş, his involvement, and the plans for the group.
Yeah, and I'm sure many listeners at the time listening to the news back in December felt the same as Curtis and I. Well, how is this going to work then with his role at ICDP? But we won't ruin the interview. Do stay tuned to your podcast feed next week, as Curtis said there, for a great chat and catch up with Steve. And he shares how it came about and the whole journey so far. But yeah, it's an interesting one. And before we go to the headlines, a story that was published this week, and unless you've been hiding away somewhere, obviously a lot of the news this week has been about the tariffs in the global market coming out of the new administration over in the US there under the Trump administration. So the Financial Times did a great coverage of what this might look like for the global car industry, and saying it faces anxious wait on US tariffs. Now, obviously, there's what's happening between the US and the EU, what's happening between the US and what they're talking about with Canada and Mexico and China. And then obviously it comes back into the UK, what the UK are doing with some of the European manufacturers, because we haven't got tariffs at the minute in the UK. So it goes into quite a bit of detail of what this might mean in the global automotive space, because obviously if it happens in one area, then it has an impact in other areas. So it's a fascinating read, but it is quite a long read. So prepare yourself for that. But we will put a link of it in the newsletter on Monday morning. But it does look at the UK, it looks at US, it looks at Europe, it looks at certain manufacturers and what this impact might have on their market presence.
You're listening to the Motor Trade Radio podcast, powered by Motors.
So headlines this week come from AM, Motor Trader and Car Dealer. So the first half of today's show will take a close look at January's new car and van registrations, which shows both markets got off to a weak start with sales down year on year. We'll also look at the latest used car market trends from Motors from their latest market view. And in the second half, after the break, we'll look at some of the latest people movements in the industry with changes at the top at Arnold Clark and Vauxhall, and two high-profile recruits to the Independent Motor Dealers Association.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
So the first headline this week comes from AM, and it is SMMT urges luxury EV tax scrap after continued new car market decline. So very much a story of two halves, this, because it's really based around the latest SMMT figures on the January registration, which does highlight that weak consumer confidence and this tough ongoing economic conditions combined to deliver a 2.5% drop in new car registrations for the month. So they dropped down to 139,345 units. But the story also goes on to say that the SMMT is now lobbying hard for the vehicle excise duty on the expensive car supplement on battery electric vehicles, which is coming in just 2 months to be scrapped, because it's arguing that it's actually coming in at the worst possible time. Now, this actually applies to EV models costing more than £40,000, which, as the SMMT points out, represents the majority of vehicles on the market, of new EVs on the market, given their higher production costs. And when this comes in, it will incur a £3,110 tax bill over the first 6 years of ownership. So if the government is looking at a way to disincentivize EV purchasing at a time when it's obviously got the ZEV mandate encouraging the uptake of EVs. So the SMMT is really flagging up that, okay, January's got off to a slow start, across the sector, across retail and fleet, and the sector does need these incentives now rather than additional taxes.
Yeah, as you say, there's a lot going on for the government at the minute. I mean, we only need to look outside of the automotive industry and see it. But as you say there, Curtis, the January registrations highlight that private is still struggling. It's 0.5% down year on year, and still there with a market share of 35.9% for 2025 there. But also fleet, who have been sort of underpinning new car registrations, particularly for the last 12 months there, also struggling with a 3.7% fall year on year, taking 62.4% share, and the rest being made up by business registration. So really, as you say, sort of continuation of that challenges of consumer private registration adoption, and probably been driven by this EV message that is constantly coming out. Now, in terms of fuel type, there, diesel continues to decline year on year, down 7.7%, taking a market share of 6.2%. Petrol, a double-digit decline of 15.3%, down to 70,075 registrations in the month of January, taking a 50.3% share. And BEV, a significant increase of 41.6%, up from 20,900 last year to 29,600 this year, so taking a 21.3% share. So a bit of a shift there from the sub 20% that we saw for the full year 2024, and just nudging above that 20% in the first months of this year. But again, it does beg the question, and what you were saying there with Mike Hawes about the taxation coming in and what that might do to these registrations going forward in the EV market if they don't address it soon.
Yeah, and it was certainly a major part of the press release that the SMMT put out. They didn't miss an opportunity here to really get it on everyone's agenda, and as they lobby the government to reconsider this. So we'll certainly see. There's not much time now. It comes in to force in 2 months' time. So we'll be hearing hopefully more on that over the course of the following weeks.
And moving on to the LCV sector. Now, Motor Trader have covered that this month, and the headline is Weakened Business Confidence Sees Van Sales Fall 20% in the month of January. Now, obviously, the van sales have been fairly strong in recent months, but saying that a fall in demand hit all but one segment, with small van registrations recording the only increase, up 89.8% to 668 units, but still obviously a fraction, only 3.5% of the total market there for the LCV registrations.
Yeah, and registrations were down pretty much across all segments of the van market, with large vans in particular down 22% to 11,500 units, and that represents 60% of the overall market. So it does highlight the pressure that the market is under at the moment. Although, having said that, battery electric vans uptake there increased for the fourth consecutive month. And that's pretty much supported by the continuation of the plug-in van grant. So registrations for the month were up just over 12% to 1,400 units, and an overall market share of 7.6%. So still a small overall market share, but certainly heading in the right direction.
Yeah, I agree. And just briefly, there's a few of the European performances coming for the month of January. Still at this point, at the point of recording, we're still awaiting the German figures, which will be eagerly awaited with what's going on over in Germany there. But France is down 6.2%, down to 114,700 year on year. Italy down 5.9%, down to 133,700. Albeit Spain, again, an increase of 5.3% up to 72,300. Now, we know that in Spain they had the bad floods in 2024. That created a spike in registrations in December, and that could still be happening now as fleets and customers replace those vehicles that they sadly lost in the floods of last year.
And next headline is from Car Dealer, and it is used car sales off to slow start in 2025 due to bad weather, but footfall is expected to rise. So this is the monthly analysis from Motors, their market view analysis of trends across the platform, and it indicates that the year got off to a slower start for car supermarkets and franchise dealers compared to January 2024, with stock sitting longer on forecourts. And the analysis goes on to show that for these dealers, the sold conversion rate in January this year was down 11% for supermarkets and 13% for franchise dealers, while independents were actually up by 1%. But certainly overall, January's sales volumes were down 4% year on year, and the slow uptake was also reflected in an increase in days to sell, which were up month on month from 33 days in December to 35 days in January, and that's also up year on year because it was 30 days January last year.
Yeah, and again, it's always great data coming out of this report from Motors, and they're saying that in January the average price of the vehicles on their platform was £17,619. That was up 0.3%. That's just £55 month on month. In line with the incremental movements seen throughout the last year, and 1% up year on year from 17,461. But they do cite, obviously, in terms of they talk about the biggest month-on-month price rise by model was the all-electric MG4, saying that the 1 to 2 year vehicle was had an increase of 9%, up to £24,319 there, and the biggest dip was the hybrid Hyundai Tucson in the 1 to 2 year old bracket, dropping 6% down to £26,490.
Yeah, and there's a comment from marketing director Lucy Tugby who says January traditionally gets off to a slow start for the used car market as buyers contend with Christmas bill payments and families prepare for the new school term. However, this year was compounded by a succession of storms, bringing high winds, flooding and snow to most of the country. So really highlighting some of the challenges facing certainly car buyers as well as dealers. And she goes on to say, as a result, dealers saw their sales conversion drop compared to the same period last year, with many now carrying over unsold stock into February. So we'll see how that pans out in February.
Certainly going to be an interesting year. Well, after the break, as we say, we'll have the extract from our supply special interview there with Tracker's Mark Rose, talking about how the business works closely with the police to recover stolen cars and how its actions are leading to arrests and the closure of what he references as chop shops.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
I think I mentioned we closed down 55 chop shops. In the process of doing that, the police made 144 arrests, and many of those have gone on to kind of receive criminal convictions. So it's not just around recovering the vehicles, it's actually starting to hit the criminal gangs and the infrastructure that they have, which ultimately can only be a good thing. And there's kind of a ripple effect that comes with that. So, we have one of our vehicles stolen, the police recover it, that leads to a chop shop that's found. That means that there will be another 8 or 9 collateral cars within that chop shop that will get recovered at the same time. And then that also means that there are probably, 250 fewer cars that are stolen over the following 2 months in that area as that chop shop closes down. So you can sort of see those ripples going out in terms of what we're doing, which is hugely beneficial and really as a direct result of the close working relationship we have with the police. In terms of the dealers themselves, I mean, the dealers are, as your audience will know far better than I, are facing some pretty considerable headwinds at the moment. You've got the ongoing high court case around finance, which obviously is being challenged again, but that is suggesting that the ability to make money from finance is going to reduce. Really tight regulation around GAP means that a lot of dealers are pulling out of that space. So a lot of them are finding or looking for ways of replacing revenues that they would have had otherwise. I won't get into all the kind of other problems that the ZEV mandate and various other things have brought. That could mean that we're here for
quite a bit longer, yes,
the rest of the day. But I guess by working with Tracker, what dealers are doing is providing a service which is genuinely needed. Theft is up, recovery down, insurance premiums are on the rise. In fact, if you have your car stolen and you don't get it back, then the chances are when you come to insure your next car, your premiums will double. So I think the dealers when working with us, have a confidence that they know that the service that they're going to offer to their customers is one that's required, is one where there is good margin in it for them, and also it's not regulated by the FCA as well, which also makes the whole thing simpler too. So it starts to really become a very viable product for them to sell and to generate incremental revenue through.
Well, I mean, we learned a lot in that interview ourselves, but I think clearly there, Curtis, the fact that there's the element of recovering the vehicle, but actually the other element that Mark was talking through there is trying to prevent the vehicles being stolen in general. Because I think on the interview, don't he talk about that when a chop shop is opened in a certain area, theft automatically increases in that area of vehicles.
Yes.
So again, great interview.
No, great interview, and he does go into more detail about the value-add products that are actually helping dealers as alternatives, and trackers placed within that. So definitely worth checking out the full supplier special on your podcast feed.
So heading back to the headlines now, the second half with some of the movers and shakers, should we call this one, Curtis?
Yeah. Yep.
So heading over to car dealer, Arnold Clark boss Eddie Hawthorne to step down after 27 years at the helm there. And I've had the pleasure of meeting Eddie a few times as when I worked for Arnold Clark's and other reasons. But Hawthorne's will be stepping down from his role on the 28th of March, my birthday. He will be replaced by the current COO, Russell Borry. And Hawthorne has thanked Lady Clark and colleagues. So, I mean, if you don't, obviously 27 years at the helm of Arnold Clark's, just look at what they have done over that time with Eddie at the helm there, and what a business is built over them years.
Yeah, an absolute industry stalwart, and it's good to see that he's staying on in terms of he'll remain on the board, but his role will change from managing to mentoring. And what better person could you want in the business to be mentoring staff? And good to see that Russell Borry, Chief Operating Officer, will take over at the end of March. And within this piece, he does actually say, firstly, I want to thank Eddie for his immense contribution to the Arnold Clark Group. His knowledge, insight and dedication have helped the business thrive. Even in the most challenging circumstances, his clarity and resourcefulness have transformed a crisis into an opportunity to make things better. So, it's good to see that continuity in the business there.
Yeah, and it's a lovely little ending there that they talk about that. Firstly, they thanks there to Lady Clark, Arnold Clark's widow there at the business, and obviously the Clark family in general and the directors there, and obviously they do talk about they're delighted to have the help of an experienced and talented operational board, as well as the 12,000 dedicated employees who work so hard to drive the success of Arnold Clark's there. So, definitely going to be a miss from the industry, but obviously a welcome there to Russell. And as you clearly said there, Curtis, for Eddie to still be involved in the business is a lot to be said for that. So I look forward to seeing this in the future.
And we have another industry stalwart in the next story, which is from AM Online. The headline is Ulrich Druce appointed interim Vauxhall UK boss after James Taylor exit. Now, James Taylor, he's been with Vauxhall for 25 years, and I've had the pleasure of interviewing him over the years, and very much as a person, very much synonymous with Vauxhall. And it's going to be fascinating to see where he pops up next, because within this story, it does sort of intimate that he'll perhaps be joining another car brand. So in the meantime, Jurek Druce, Stellantis UK Group Managing Director, will take over that role on an interim basis. But certainly within this piece, Jurek Druce does thank James for his support and loyalty and dedication to Vauxhall over the years, and says James leaves Vauxhall ready for the UK's transition to an electric future, and on behalf of his many colleagues and friends, I wish him personally all the best for the future.
Yeah, I think there's quite a few changes within the Stellantis business since the departure of Carlos there. But it is, yeah, I mean, as you say there, James Taylor started his career with Vauxhall in 1997. How old does that make you? Because Phil Curtis on his undergraduate there, which kind of shocked.
Yeah, we were well and truly into our careers in automotive by then, weren't we?
Probably the first company car, yeah, definitely. I mean, it is. I mean, again, some of the names and the changes, and Jurek has had a few roles recently, moving around within that Stellantis brand. So I wish, obviously, James all the best, and look forward to hearing where he does turn up very soon, and obviously wish Jurek all the best for the helm there of Vauxhall.
And final story this week comes from AM Online, and the headline is IMDA welcomes 2 familiar faces onto its committee. So we're talking about industry stalwarts. Well, one of these familiar industry faces is Sandy Burgess, former chief executive of the Scottish Motor Traders Association, and he's joining the IMDA along with Alan Thompson of County Garage Ford, who is chairman of the National Ford Retail Dealers Association, which has actually represented many of the dozens of small to medium-sized Ford retail dealerships that have been terminated by the brand recently as it shrinks its network. So 2 high-profile names here joining the IMDA.
Yeah, and you say, I mean, there with Sandy, and we are due to catch up with Sandy at some point, and I have to, if he is listening this morning, I have to apologise that I never managed to get in touch with him just before he finished at the SMTA there, but we will be in contact. But I mean, it is showing that these guys have got something still to give to the sector and really get involved with that independent dealer sector market. And Umesh Samami, who's the chairman of the IMDA, said that both Alan and Sandy will be a fantastic addition to the IMDA committee, and highlights the strength and growth of the association.
But that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. We'll be back next week with that exclusive interview with Steve Young, talking about the launch of Auto West London, which you really won't want to miss. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.